Holy smokers, folks, this ain't no dang joke, as Dick's Sporting Goods, a very popular retail store in the United States of America, is down over 24% in the trading day here today. It's a low valuation name. We're going to talk about, is this stock a buy now? We're going to talk about what happened to the stock, because I think what happened in regards to Dick's Sporting Goods, I think is very important that everybody understands what happens there, because something like this could definitely happen with your stocks, and it's very important to understand what happens going into an earnings and how that setup matters significantly for what stock price move happens after the earnings. And so I want to tell you all about that, go through that. And as far as the reaction, we're going to react to this 5-minute clip, which this gentleman, Scott Wagner, absolutely, oh my gosh, he just, it's vicious. Let's just call it that, because he brings on Steve Weiss. Steve Weiss owns the stock. We know Steve Weiss on the channel, obviously. Okay, a very bearish man usually, but he's been long Dick's Sporting Good, and he just gets obliterated. Now, before we get into the reaction and whatnot, I want to show you guys what the income statement was looking like, so you kind of get some feel. Now, keep in mind, these numbers aren't the only reason that stock went down 24+%. We'll talk about why it went down 24+%, but the numbers were bad. Revenue grew year over year about $100 million, so that's good, right? Outside of that, everything else was bad, okay? Cost of goods sold went up way more, or let's just call it this, okay? As a percent, cost of goods sold went up way more than revenue went up. You never want to see that. Never want to see as a percent your cost of goods sold going up way bigger than your revenue. That's going to mean you're going to have a lot of problems, okay? Gross profit actually down year over year. Selling, general, and administrative expenses went up substantially. We're talking that number alone was up over $100 million on a year-over-year basis. That's a disaster. Income from operations obviously got killed. $311 million. In this same quarter last year, they did $460 million. Net income down substantially. EPS down substantially. So nonetheless, folks, there's two main reasons why the stock is down huge. One is the numbers, and we'll get into the other. Alrighty, let's get into this. By the way, appreciate everybody joining me as always. New all-time high subscribers in the history of the channel. We just busted through our one-day moving average. I appreciate y'all being here as always.
For its worst day ever. Stock's down 24%. Earnings missed. Revs missed. Comps missed. Steve Weiss missed. Weiss, you join us now on the phone. What? I just want your reaction before everything else.
Yeah, well, look, a few reactions. First of all, I did detect some glee in your voice as you're saying Steve Weiss.
No, I didn't. I really didn't. I'm serious, though. What's up with this, Weiss? This is one of your favored names.
It's my only retail exposure, and over the last few shows when asked about it, I said, my target's about 150 or so. Frankly, this is an error that I made. So you go back to the old adage, bulls and bears, make money, pigs go broke. So that's what happened. The stock was close enough to my price target. I thought management would be able to execute. They've held their margins and sales post-pandemic, one of the few online retailers in bricks and mortar to really do that. So I got a little piggish. I was thinking the stock would trade well, that seasonally it's a good quarter for them because of outdoor activity, and I was wrong. So made a couple on my part, really no excuse for owning it given where my price target was and how well the stock did for me.
So what about now? What about now? Do you buy more on the dip? Do you sell it? What do you tell people?
This isn't the type of market, I think, where you buy on the first day that it goes down. I do believe the stock will go higher. If you look at...
So typically, a little hack, okay? It doesn't work 100% of the time, but it seems like it works a lot more than it doesn't, okay? And we'll see if it works in regards to Dick's. But usually if a stock goes down big after earnings, you usually want to wait 2 days afterward to 3 days afterward to start buying the stock. So let's say you really wanted to own Dick's, a lot of people would say, I'm not going to buy it till maybe like Thursday or Friday, something like that, okay? Doesn't always work like that, but yeah, it's just something to keep in mind. And you can always take like a one-third approach. So let's say you're like, I want to buy $10,000 worth of Dick's. You could always buy, $10,000 tomorrow morning. You could buy $10,000, or excuse me, not $10,000. You could buy $3,300 tomorrow, another $3,300 the next day, and then $3,400 the last day. You could always play it that way as well, but that's kind of a general rule. And I think because it's such a famous rule in the stock market on Wall Street, I think it almost becomes like a fulfilling prophecy, right? Because self-fulfilling prophecy, because at the end of the day, if everybody thinks that way, then you're not going to see buying pressure for a few days because everybody thinks the same way, right? So something to keep in mind.
History of it, it's had periodically not drops of this size, because as you correctly point out, it's the largest decline ever. They took down earnings by about 10% going forward. A third of that is from shrink, which is the coordinated theft of these stores that you're seeing across retail.
Really? So what I picture when I think about like people coming and stealing stuff at Dick's, I picture just everybody jumping in, grabbing a bunch of baseball bats, and just running out of the store with just massive amounts of baseball bats, like aluminum baseball bats for kids. I'm like, oh man, seriously, for Dick's?
Oh, this is the first time Dick's has mentioned it, frankly, on a call. Look, here's what's encouraging about it. What's encouraging about it is...
Let me stop you for 1 second. Forgive me. This idea of shrink. Retailers used to blame everything under the sun. Here and there, it's like everybody would blame the weather. You know where I'm going. This is like the kitchen shrink. Now everybody all of a sudden is mentioning it. You just said their first time ever. Do you take that at face value? Were you suspect of that at all? What's your read on that?
My read on it's accurate. They attribute a third of the miss to the shrink, and we know it's really an epidemic out there. That gangs come in and they just take what they want to take, regardless of the retailer.
Well, I've seen the video. I mean, everybody has seen the videos of all of that, but I mean, because it's the first time that they mentioned it, it's the first time they've experienced it. I mean, I just am trying to get a real good handle on where we're at on the general retail landscape, where it seems every retailer is now citing it on their earnings call or in interviews on this network.
Yeah, but I think it's accurate. So I don't know why they hadn't mentioned it before. I can't imagine it's a case of first impression, but maybe more severe than it's been. Look, this is not the place where you really want to do that, right? I mean, you can't steal one Air Jordan or one, Hoka, because, you still need the other shoe. And when you look at the other stuff they have there, sure, baseball bats for Little League, they're minimally $200. That's expensive. But the other stuff, no, I get that they're going, but they're doing it at Target, where the goods have price point that may be less. So it is a factor. Look,
I think and correct me if I'm wrong, what would be like the most expensive stuff you could jack from Dick's? I'm guessing baseball gloves, right? Baseball gloves, some of those really nice baseball gloves are expensive. So I'm just trying to think, like, what would be like the most expensive type things you could realistically jack from Dick's, and I'm thinking it would probably be baseball gloves, is my guess.
The bright spots here are that they say that margins, and the stock sold off initially, I believe, not only in the miss, but also on margins were down a couple of basis points, gross margins. They say margins will be higher going through the end of the year. So part of the miss was attributed to outdoor, which they would not quantify on the call how significant that was. But that's not new news. That was an issue last quarter as well. And the new store formats, that soaked up some of the margins as well, but they are going gangbusters. So I do believe the stock will recover. Whether it will recover to 150 or not, I don't know, over the next 6 months to a year. But I just don't think you sell it down here right now. I hope management took the numbers down, and they're pretty good. Generally. So this was a real miss, aggravating for the reasons I mentioned.
Sure.
But I'm not selling any. I'll look to buy more when it stabilizes.
I understand. I appreciate you making yourself available, Weiss. I know people wanted to hear from you today.
So I want to get into, in just a moment, the second component of why Dick's Sporting Goods really fell so big today. Then we'll get into a couple stocks where the setups are pretty good going into earnings. It doesn't mean it's foolproof plan that they're going to go up, but they're set up pretty good. But the first thing I want to do is call out baloney BS, okay? This whole shrink thing in regards to Dick's, okay? You're always going to have a few people steal from a store. It's always going to happen. At the end of the day, this problem for Dick's is not really in relation to people stealing stuff, okay? At the end of the day, like, one problem they have is revenue growth. Certainly that's an issue for them. When you think about how much inflation's been, and you think about how this, company's always opening up stores, like, that's a really weak revenue number, okay? The second problem is, look at selling general and administrative expenses. I mean, $775 versus $657 the same quarter last year. They clearly got an issue with spending at the company. Like, they're hiring folks like crazy, I guess. Like, that's insane, right? Next component is, this could be maybe their rents went up. They have to rent out a lot of locations. It's not like they own their own locations, right? So maybe some costs went up as far as all that goes. That's something to take into account, right? Distribution costs, if anything, should have got better for the company. If it got worse, then that's just the company not executing well. When you look at trucking rates and everything that's going on there. So at the end of the day, it just looks to me like Dick's just isn't performing, and it's just a bad, management team doing a bad job with that company at the moment, okay? Now, the second reason that, why this stock went into this earnings in such a bad place, that it was set up for such significant downside, the real reason that's having its worst day ever, we're about to get into, and then we'll get into a couple stocks that are setting up pretty good or going into earnings, is a problem with Dick's is it went into these earnings high flying. Literally went into these earnings at pretty much an all-time high for the stock price. Now, you want to go into your earnings at an all-time high for your stock price, you better freaking come through with some sick numbers. And I'm talking sick as in good, okay? Not sick as in bad. You come in and you report the numbers Dick's just reported, which were bad across the board. You are going to see your stock price absolutely get decimated. And that's why Dick's Sporting Goods is literally having its worst day in the history of that stock here today. Because you can't go in there at an all-time high and then report crap. You are set up for an absolutely epic fall. If Dick's was, if Dick's went into this earnings and the stock was trading at $100, it's a whole different scenario, right? If it was trading at $90, $80, could the expectations would just be so low. But the problem is Dick's went into this at an all-time high, pretty much, and the expectations were sky high. Steve Weiss was expecting the stock to go to 150, if not over 150, right? That's a bad setup, and that's why that stock is having its worst day ever. You have horrible numbers met with going into earnings at an all-time high. You're done, okay? Now, let me show you a couple stocks that had pretty good setups going into these earnings. Now, this does not mean these stocks are going to skyrocket, but I'm just saying the setup's really freaking attractive for these two stocks, and they both report earnings actually in the morning tomorrow, okay? One is Foot Locker. So, Foot Locker's setup is insanely great going into these earnings. The reason being is the stock's been absolutely decimated, okay? Let's just pull up a 1 month. The stock has just been going lower and lower and lower into these earnings. Obviously, the weakness today in Dick's Sporting Goods freaked everybody out even more in regards to Foot Locker. Nike stock has gone down 9 straight trading days, 9 flipping flapjack and straight trading days, okay? So for a company like Foot Locker, it's going in with like an opposite situation versus like a Dick's Sporting Goods, right? I mean, the stock right now is pretty much at a 5-year low roughly, right? Somewhere around there. Foot Locker's going into this earnings with like expectations on the floor. No one's expecting anything good here. So if they just don't report a disaster, don't be surprised if that stock flies 10, 15% after earnings. If they report still a disaster, well, then you're still probably $20 or so, okay? But this is a stock that, like, as long as it's not horrible, the stock will fly. That's a really, really good setup going into an earnings. That's actually the setup I would like going into an earnings rather than a different situation, right? Another stock that's set up pretty darn attractive going into their earnings is Bath & Body Works, which also reports in the morning as well. And once again, just because you go into earnings with a very attractive setup, it does not mean you're guaranteed to see your stock fly after earnings. It's just, it's just call it the risk reward gets more into your favor when it comes to the kind of the reward side, okay? Dick's Sporting Goods, Bath & Body Works, another stock where it's just kind of gone down and down and down into these earnings, all the way down to under $35. I mean, you look at the stock just a few weeks ago, it was pushing 40, now it's going down to, 34. And the good thing with Foot Locker and Bath & Body Works, these ones don't have to deal nearly as much with the whole shrink situation, okay? The whole theft situation doesn't mean, no one ever steals something from Bath & Body Works or Foot Locker. It's just much of a less situation. Foot Locker, very small stores, usually in the middle of a mall somewhere. So it's not impossible, and obviously the main thing they sell there are shoes, and if you're going to sell, steal a shoe, it's like one shoe. And they always have security at the door as well, usually in Foot Locker stores. So yeah, when it comes to Foot Locker, they should be pretty good as far as that goes, right? As a turnaround play. In Bath & Body Works, I mean, I don't even know who would steal something from Bath & Body Works. Like everything, it's all soaps and candles. Like everything in Bath & Body Works is less than $25. Like, I don't know. Like I feel like you steal something from Bath & Body Works, you deserve to drop one of those big candles on the ground and step on it and like have your foot bloodied with glass or something like that. Because that's just like, what are you doing, man? What are you doing with yourself? So yeah, those setups are pretty good. We'll see how obviously they report, but the setups are really attractive compared to a Dick's Sporting Goods, which went in just with a horrible, horrible kind of setup there, okay? So those are just things to kind of keep in mind, especially if you're thinking, in regards to like, do I want to buy, let's say you want to, own a stock for the next 3-5 years, and sometimes you're trying to figure out, should I buy more shares before earnings? Should I buy it after earnings? A lot has to do with, what is that company setting up for? Where's the risk reward? If it's high flying, if it's at all-time highs going to those earnings, you're setting up, unless you're in some sort of ultra bullish market, you're setting up for a lot of significant risk to the downside. If you're already on the floor, and the expectations are on the floor, like you're setting up for anything positive in that, you're setting up for probably 10 to 15% pop. So you usually want to be a buyer going into those earnings rather than, kind of sitting on the sideline, right? Appreciate everybody joining me as always. Thanks so much, folks. I hope you learned a little bit from today's video. Hope you enjoyed this one. And thanks for being here. Thanks for being subscribed. New all-time high subscribers. If you're looking to apply to join my private group, check out the pinned comment down there. Fill out an application. We'll see if you're a good fit. Much love and have a great day.